welcome to this weekend's edition of Taking Stock. I'm Sonia Shenoy, and with me as always is Anuj Singhal. What a great week it's been for the market. I mean, just about 3 days, but short and sweet it was. The market rallied about close to 3% in 3 days, and we saw big moves come in the bank nifty, in the mid-cap index, the small-cap index as well. Just makes you wonder whether the last couple of weeks of correction has now over, or was it just a short covering rally? Anuj, what's the sense that you're getting after looking at the internals?
Yeah, so Sonia, you have to say that this was a powerful short covering bounce, though on Wednesday the kind of move that we had, made you believe that maybe there was some fresh buying as well. Two things could happen. One is that, of course, the market was net short, so incremental short covering led to big move. And second is that you have a policy on early next week, and a lot of people are taking positions on that and maybe expecting a rate cut. That was the buzzword on the street on Wednesday, and that's why the bank nifty was rallying so much, the PSU banking space in particular. But I think the market is still exhibiting signs that the correction might not be over yet, and next week will be the real test of the market's trend, because the March series was so bad, especially the end, that a bit of short covering bounce was always in order in April first week. What you saw was a market move on back of very low cash market volumes as well. So the test of this market would be next week. If next week the Nifty is able to go past 8600, sustain above that and see some volume action, then maybe you could say that you found a bottom around 80 to 70 and the market is ready to move on. But let's wait out before saying that, okay, this is the end of the correction and the market is going back to all-time highs.
Well, indeed, end of the correction or not, one thing is for sure, that this market is a buy on every dips, because at least for the longer term investor, yes. Because in the week gone by, you saw a lot of bluest of blue chip names see buying interest, whether it was Sun Pharma, which was up 7%, HDFC was up 6%, IndusInd Bank, Kotak Mahindra Bank, ITC. So clearly, even amidst all this volatility, there is buying.
Indeed, and there was a lesson in last week's trade. You had BPCL making lifetime highs, you had Lupin making lifetime highs, Sun Pharma pretty close to getting there, Ranbaxy made a lifetime high. If you identify your 5 or 6 index stocks, or 5 or 6 even non-index stocks, and if they correct good 10-15%, you should go out and buy them, because whether the market makes a new high or not, individual stocks will, and if you identified good stocks, you'll always make money if you buy the corrections.
Indeed, and that's what value buyers or stock pickers have been doing. And on that note, let's get one of them on our show today. We have Andrew Holland of Ambit Investment Advisors who joins in. Andrew, hi, welcome to the show. This week was much better than last, with the index seeing a cool 3% recovery from lows. Do you think the worst is over in the near term?
Yeah, I think when we got to that 9,000 level, as you remember, was pretty gloomy, and we come to kind of the bottom end of the trading range. I think now for India, 8,500 Nifty. So the risk for the markets is obviously globally now, but global we seem to be kind of keeping our heads above water. Expectations that China are going to reduce interest rates very shortly, and we were bound to have a bounce from the low levels, but that's all I think we've had at the moment. Expect more volatility going forward, and obviously we've got the credit policy coming up as well. So lots of things out there. I don't think the earnings season is going to be great, so a lot more volatility going forward. Don't see us really kind of moving so significantly higher in the very short term, and obviously with the holiday, I'm sure volumes have been light in the last few days as well.
Andrew, good to see you on the show. Banks and pharma were the large themes in FY15. Do you get a sense that will repeat, or will something else take over this year?
So our big 3 themes for this year, which continue to be on the radar, is that we still expect interest rates to fall sharply, so the banking sector remains a favourite of ours, mainly private banks. Again, though, I think we have to be very careful ahead of the results season, so we're just buying the quality private banks at the moment. In terms of the leverage or financial gearing story, it is starting to play out in quite a number of areas, which we've seen more recently in terms of Suzlon obviously being virtually kind of bailed out by the Sanghvi family, and then you've got Pipavav Shipyard being taken over by Reliance. So there's pockets of areas where there's growth, where there's leverage there, of which there's value. So that's become an interesting area. So I think financial gearing will be a theme, that's for sure. And the third theme is our theme we've been going on for some time now is, who's supplying India. So as orders start to pick up, and we started to see orders picking up in the past few weeks, and as government throws money into infrastructure from April onwards, I think we'll start to see who supplies those sectors and those companies' order books starting to get full, and that brings in your operational gearing. So those are the three broad themes that we're sticking to, and the sectors.
Okay, and what about the downside, Andrew? What could be the downside risk for this market in the first half of the year, given that earnings are expected to be muted again and Fed rate hike could come mid of the year?
So, we think India is going to be in a trading range between 8,500 to 9,000 on Nifty just by itself. But if you have a more negative global background, then you could see the Nifty hit towards 8,000. So that would be where we would see the downside. I don't think people want to chase the market because the PE is quite high at 16. And I think earnings have to catch up, and that's going to take a few quarters yet. And that's why we think we're in a trading range for India. But obviously, if something more negative happens globally, then obviously, India can't withstand that. And that's where you get the extra 3-4% taking you towards 8,000.
Andrew, in the last fortnight, the government has pushed some right buttons, whether it is in the fertilizer space or power and coal, in terms of easing raw material supply, easing infrastructure bottlenecks, etc. Is this a time to buy any of these sectors?
Yeah, you see, again, the government is doing some of the right things, but really to get this economy going and to get confidence back, they've got to throw money into infrastructure. So they've got to start putting out contracts for railways, roads, ports, and get some companies' order books starting to be filled. Unless you get that, the economy is not really going anywhere very quickly, and neither are earnings. So that's what you really need to see. And if all these incremental things the government are doing will help as the economy starts to grow, that's going to help companies. But I wouldn't, just on the back of what the government's done at the moment, go and choose any company, because there's no volume for them, to see their top line and bottom line grow. So it's tinkering in the right way, but now you need to kickstart the economy to really, to put that through to the economy and through to companies' top line and order books.
Okay, you did mention financials as a theme for 2016, but what within financials? Because it's a large space. We have PSU banks, private banks, NBFCs, and sometimes with divergent performances. Yeah,
well, I think I'm looking at the banking. I think this is going to be an interesting result season, because obviously we'll get a good idea of the NPAs, restructured assets, which have either happened or not happened, and I think we'll have a clearer picture of who's starting to emerge. I mean, the private banks is pretty easy to work out, but the PSUs is a little bit more difficult. I do like what the SBI chairwoman's doing. I think she's making a lot of the right noises. Whether I want to really buy yet is a different matter. But if you get the bankruptcy rules or laws coming through, that could be a big game changer for the banking industry. There's a lot going for the banking industry, but reduction in interest rates and getting the economy going will obviously help the banking sector. But unless you get away from the management problems of the past, and get new management into the PSU banks who can really grow those assets, then we're kind of where we are. And that's why you'll probably continue with the private banks and selectively only a few PSU. But it's a sector we like, and we're going to be investing in. But I think the results season will give us a lot more of the pecking order, both for the private and the PSU banks.
Okay, thanks, Andrew, for your thoughts. We'll see you again, of course, later on. But for now, you have a good weekend. We'll do one thing. We'll slip into a break. But in the meantime, let's listen into some market opinion that we heard through the course of the week.
One of the returns are probably going to be back-ended. So, our view has been that the first half is going to be a flattish year for the markets, and probably most of the returns for the year will be made in the second half. I think by the time we end the last quarter of this calendar year, we'll probably be, back into that double-digit sort of earnings growth. And more critical, I think, is by the time we come towards the end of the year, hopefully we'll start seeing some green shoots in the economy. So the hope will be that next year is a very strong year for earnings and very strong year for the economy. And that is what is really going to lead to markets heading higher.
I would expect another rate cut, if not very soon, then soon enough. And these guys are wholesale borrowers, so some of their borrowing costs will come up and may not be passed through as the CV cycle goes through the upswing. So both in terms of asset quality and spreads and operating leverage and cost income, they're going to gain. Their books are going to grow faster than what they're growing right now.